What's up, my YouTube family? What is going on? Happy weekend to each and every one of you watching this particular video. I've been away for some time now. A lot of activities I've been trying to put in place, and that has been taking so much of my time. But not to worry, I'm back and I promise to be giving you guys content as often as possible, right? So, in this particular video, I'll be showing you guys something very, very different. In fact, this particular topic I'll be talking about, you can't find it anywhere on the YouTube space. And I mean it, right? So it is part of what I have coined out from my James education course, right? To share with you guys for free on YouTube, right? So now in this particular video, I'll be sharing with you guys how to use candlestick patterns to trade supply, demand zones, and also how to use candlestick patterns to trade imbalances and other blocks. So a lot of what is on the YouTube space, right, is all about you trading chalk, more of a break in market structure. Anytime you want to make an entry from your point of interest, whether you are trading an order block, whether you are trading an imbalance, the most popular kind of entry on the YouTube space is breaking market structure on the lower time frame, and then you wait for price to retrace back into your point of interest before you can execute a trade. But not as if that particular strategy is a very bad one. It's okay, but sometimes you get to see price not come back to mitigate you in. You also get to have situations whereby price comes back and wicks you out, like hits your stop loss before price now gets to your particular direction, right? So this particular video or this particular topic will help you to get into your trade instantly. It will help you to be using instant execution on your trade. Immediately price gets to your POI and you spot out these particular patterns. So without saying much, let's get right into the business of this particular video. Yes, so like I said, that in this particular video, I'll be showing you guys how you can use candlestick patterns to trade an imbalance supply or demand zone, right? If you are using the ICT concept, this is going to be of a very large advantage to you because the most popular kind of entry model that we have is the break in market structure on the lower time frame, and then you wait for price to retrace back to maybe your imbalance or your other block before you can take a trade, which amounts you to using a pending order. But in this particular strategy that I'll be showing you, in this particular entry model, you will be able to be using instant execution whenever price gets to your demand zone, your supply zone, imbalance, right? So the pair that we'll be using for this is gold. This is not just restricted to only gold, right? It works on all pairs, and also it works on all time frame, but I'll advise you stick to the higher time frame because a lot of fake signals comes in on the lower time frame. So I advise you stick to the higher time frame, probably from the 45 minutes upwards. There you'll be able to enjoy using this particular entry model. So now here we are on the 4-hour time frame, right? And normally when you are trying to carry out your analysis, you mark out your supply zones or maybe the demand zone. Like we have here, this particular supply zone that we have here has satisfied all the criteria of it being a valid supply zone. We also have this particular supply zone here, right? So how does this particular strategy come in play? Having marked the supply zone, I think it will be best for us to scale down to, let's say, 1 hour time frame so that we can make our entries on those particular zones. So for you to also be able to use this strategy effectively, you have to be able to know candlestick patterns on your fingertips, right? because if you don't know it, you will not be able to read the candlestick patterns when they are printed on the chart. Now, for this first supply zone that we have here, we can see what happened. Price after selling, and we marked out that zone, price retraced back into that particular zone like we have here, right? And when price retraced into that zone, we can read the candlestick patterns that we have here. Obviously, this is an evening star, right? So with this, we want to look at selling from this particular zone that we have here, and probably we'll put our stop loss at 50% of the original demand zone that we marked out, and probably our target will be here. So we're having 22 pips for 95 pips, but unfortunately we are going to take a loss here because price actually retraced back deep into our zone and they stopped us out, right? But also, as you can see here, price having stopped us out. This is another hack, another trick here. Price having stopped us out and producing this kind of healthy candlestick still shows us that price is still going to drop. But at the point where this particular candlestick has been printed here, we will not be able to enter into this trade because what we will be seeing here will be way too much that we can risk. Imagine you want to take this particular trade, we are already seeing 50 pips here. So what you will do is you will wait for the next candlestick that will be printed here. You wait to see if it's going to retrace 50% of this particular candle. If it retraces 50% of this particular candle, then we can take this trade and then still target this particular zone that we have here. So, but as you can see here, price didn't retrace 50%, price dropped, right? So this is not to say that you give up on your particular zone. As far as price has not broken out of this zone, the body of the candlestick has not broken out of this zone remains valid. So having got to this particular point, you can see what happened here. There was a fake out at this particular point here, right? And then looked as if price was going to break structure, but it closed with a hammer, right? So automatically, that is going to be an entry for us. That's going to be a very beautiful entry for us, and we turned out to have that as 26 pips, or this is 30 pips, right? And then our target will be this zone. I personally like to use the time frame that I use to mark out my trend to determine my take profit zone, right? So my take profit zone will be this next low that we have here, which is giving me about 121 pips, right? So as you can see here, price reacted judiciously, dropped from that particular point, and you can see that the loss that we took here has been covered up by this particular trade that we have here, right? So this is 30 pips for 122 pips, right? So now we move ahead, we get to this particular point here on 4 hour, the next demand zone that we have here, right? Now on the 45 minutes, what happened? Price came into our demand zone, and what are we doing here? We have been watching out to see what is going to happen here. So what probably happened here was we had this first candlestick here pattern, which is an engulfing candlestick pattern, which definitely will want to take that particular trade, right? And I think our stop loss will just be all around 38 pips, right? And I'm very sure that probably we'll be targeting about 181 pips. Let me quickly get to the 4-hour time frame so that I'll be able to see where our target would have been, right? So I think probably we'll be targeting about, to be our first take profit, 139 pips, right? So on the 45 minutes time frame, you can see what happened there. After this was confirmed, this had come for our stop loss again. But like I said, until the body of a candlestick breaks our point of interest, then this particular zone remains valid, right? So the next candlestick pattern that formed here was an evening star, right? So we have this first bullish candlestick, a doji candlestick, and then we have the bearish candlestick, which gives us a confirmation. And then what we now have here is this particular candle. Now, like I said, this being 52 pips, the right thing that we are going to do is to wait for the next candlestick to retrace 50% of this candle, right? And then probably this is going to be our entry. We'll be entering at 50% of this candle, which now gives us a reduced stop loss of about 31 pips. And then our target of 62 pips is achieved. So you can see that since we lost to this particular trade is going to recover our loss for us, right? So this does not just pertain only to the 4-hour time frame. Even if you are a day trader, and let's say you are a day trader who uses the 2-hour time frame to trade, right? Even if you are a day trader, right, you can still use this pattern very, very judiciously. Now let me show you how that works. This is a demand zone for us. This is a demand zone for us. All this also works on candlestick patterns, trust me. So it's not a new stuff, right? So now let's use those 3 zones for example. Here I am on the 45 minutes, and you can see what happened here. This is our demand zone, right? Price got out of the demand zone, retraced back into this, and then it bought off. Now when price retraced back into that particular zone, what are we looking out for? We can see that we have an engulfing candlestick pattern here. Having seen this particular rejection on this candlestick, we were about to react here, but sometimes this might just be a normal candlestick, right? So you might just want to wait for more confirmation, and having seen this is an engulfing candlestick, so definitely you're going to engage in this particular trade, right? So this is giving us about 51 pips, which might be so high for you to take it, right? You might just forgo this particular trade, or you take it if you want to swing it, right? Now here we are on this particular zone. We can see this happen here. Price came into the zone. Price came into the zone. The next candlestick closed, there was a rejection, right? But this particular candlestick had filled it. So it's more of like we are having a morning star, but though it's not really printed very, very perfectly, right? So what we are going to do here is we'll take the trade off this particular zone, make our stop loss to be around 30 pips, right? And then our target is going to be this high here, which is 34 by 127 pips, right? Now we still have the same thing here. Price break structure, came back into our zone. This is the zone, and then we have a morning star, right? We make our stop loss about 30 pips, and then you can target as far as we wanted to target. So here to this point gives us about 304 pips, right? So that is how to use candlestick patterns to actually trade supply and demand zones and also imbalances, right? They work on all pairs, they work on all time frames, but like I said, I will advise you to stick to the higher time frame. More of like you can make 45 minutes to 1 hour to be your entry time frame, and then you can make 2 hour upwards to be your trend and the time frame you use to mark your zones, right? And also remember the other 2 hacks that I told you, that if the body of a candlestick does not break a zone completely, then that particular zone is still valid. So you need to take note of that, right? Because you're going to have scenarios where price just wicks out that zone and then goes your direction. If you're not careful, you're going to think that price has broken that structure and maybe the trend is going to change. So with that, we've come to the end of this particular video. This particular entry model has been taught in my course. Not just this entry model, I have over like 3 entry models that has been taught in the James course. So for you to be able to know how I trade and understand my own pattern of trading, join our Telegram community with the link in the description section, and then you send me a message and definitely you can purchase the course from there. Also, don't forget to follow me on all social media platforms. Also, please subscribe to the channel, and also share this particular video to get to other traders out there. Till I see you again with yet another refreshing content. Peace.